Close your eyes. You're standing in the middle of a modern grocery store. You grab a can of Coca-Cola, a box of Tide laundry detergent, and a pack of Pfizer aspirin. You pay with a Visa card, check your Apple Watch, and walk out to your Ford Hybrid. To you, this is a normal Tuesday. You just patronize 6 completely different, fiercely competitive global brands. Now, open your eyes. Plot twist. You didn't buy from 6 different companies. Behind the scenes, the largest shareholder of Coke, Colgate-Palmolive, Pfizer, Visa, Apple, and Ford is the exact same entity. A colossal, invisible financial behemoth that holds $10 trillion in assets. That is 10 with 12 zeros after it. More money than the GDP of Germany, Japan, and India combined. They don't make products. They don't run commercials. You've probably never seen their logo on a billboard, but they own a massive slice of almost every public company on Earth. This is BlackRock, the shadow empire of modern capitalism. And today, we're going to look at the secret code, the devastating mistake, and the terrifying supercomputer that allowed one man to quietly buy the world. To understand how we got here, we have to rewind to a time when our shadow king was just a regular guy who made a monumental, career-ending mistake. First stop, New York, 1986. Inside the sleek offices of First Boston, a legendary investment bank, a young bond trader named Larry Fink is the undisputed golden boy of Wall Street. Larry is smart, aggressive, and apparently possessed a brain that could calculate interest rates faster than a desktop computer. He has just pioneered a brilliant new financial product, mortgage-backed securities. Yes, the exact same financial instruments that would eventually blow up the world in 2008. But in 1986, they are a license to print money. Larry's division brings in billions. He is the favorite child. Until, suddenly, the music stops. In a single, disastrous quarter, Larry's department doesn't make money. They lose it. A lot of it. $100 million. Gone. It wasn't because Larry got dumb. It was because the risk models he was using failed to predict a sudden change in interest rates. The models said they were safe. The market said they were bankrupt. Just like that, the golden boy is fired. He didn't just walk out of the building embarrassed. He walked out obsessed. He realized that on Wall Street, the person with the best investment strategy doesn't win. The person with the best understanding of risk wins. He didn't want to just buy and sell stocks anymore. He wanted to build a machine that could see the future. A system that could calculate every single point of danger in the global financial system before anyone else did. So, in 1988, Larry Fink teamed up with a handful of partners and started a small firm in a single room. They called it BlackRock. But Larry didn't just hire traders. He hired programmers. His goal wasn't to build another bank. He wanted to build a brain. A massive, centralized database that could analyze every stock, bond, currency, and real estate market on the planet. They called this software Aladdin, an acronym for Asset, Liability, Debt, and Derivative Investment Network. A fittingly magical name for a system designed to grant Larry's ultimate wish, absolute visibility. Aladdin is not just a glorified Excel spreadsheet. It is a terrifyingly complex supercomputer network running on thousands of servers. It doesn't just track stock prices. It tracks everything. The weather patterns in Brazil that might destroy a coffee crop. The shipping lanes in the Suez Canal. The probability of a labor strike in a French auto plant. The exact likelihood of a homeowner in Ohio defaulting on their mortgage. Aladdin runs millions of Monte Carlo simulations every single second, constantly stress testing the world. Imagine the conversation inside the early BlackRock office. Larry, we want to buy Japanese government bonds. What does Aladdin say? It says if a typhoon hits the coast of Osaka next Tuesday, our risk profile increases by 0.04%. Sell them. Buy U.S. Treasuries instead. Right away. It was a cheat code. While other Wall Street firms were making decisions based on intuition, spreadsheets, and 3 martini lunches, BlackRock was trading with the cold, calculated precision of a supercomputer. And soon, other people wanted in. Major banks, pension funds, insurance companies, and even sovereign wealth funds looked at BlackRock and realized they were playing chess against a computer that had already mapped out the next 50 moves. They didn't want to compete with Aladdin. They wanted to rent it. Today, Aladdin doesn't just manage BlackRock's own $10 trillion in assets. It is the software used by hundreds of other institutions to manage their money. In total, over $21 trillion of global wealth is managed using Aladdin's algorithms. That is roughly 10% of all financial assets on Earth running through a single, centralized computer system. If Aladdin likes a stock, trillions of dollars flow toward it. If Aladdin flags a risk, those same trillions vanish in a millisecond, which brings us to your own risk. While Aladdin is tracking $21 trillion, there is a whole separate network of data brokers quietly tracking you. Every time you click accept on a website, sign up for a store loyalty card, or search for something online, your personal data is collected, bundled, and sold. Your home address, your phone number, your email, and even your financial history are actively traded behind your back. Scammers use this data to target you, and identity thieves can literally buy your digital profile to open credit cards in your name. Now, back to Larry. By the early 2000s, BlackRock was thriving, but they were still primarily a risk management firm. They had the brain, but they didn't have the massive pool of capital they needed to truly dominate. That changed with a quiet, structural revolution in how the average person invests their money. Welcome to the era of passive investing. For decades, if you wanted to invest in the stock market, you hired an active manager, a guy in a fancy suit who claimed he could pick the winning stocks. But these managers charged high fees, and most of them actually performed worse than the market average. Then came the index fund. The concept was simple. Instead of trying to pick the fastest horse, why not just buy the entire racetrack? An index fund doesn't try to beat the market. It simply copies it, buying a tiny piece of every single company in the S&P 500. It is cheap, automated, and incredibly efficient. In 2009, BlackRock made a blockbuster acquisition. They bought Barclays Global Investors, which included a little-known product line called iShares. iShares was the pioneer of exchange-traded funds, or ETFs. Suddenly, BlackRock became the absolute king of index funds. Every single time a teacher in Chicago, a plumber in Houston, or a tech worker in Seattle puts money into their 401k, a portion of that money automatically goes to BlackRock. They don't even have to pitch you. The system is set up to feed them. But here is the catch. The fine print of modern capitalism that almost nobody understands. When you buy an index fund through iShares, you get the financial return of the stock. If Apple goes up, you make money. But you do not own the voting shares. BlackRock does. Because they are the legal custodians of those trillions of dollars. They are the ones who get to vote at the annual shareholder meetings. And on Wall Street, voting power is the ultimate leverage. Imagine a conversation between Larry Fink and the CEO of a Fortune 500 tech company. "Hello, Mr. CEO. I noticed you're planning to build a new factory in Arizona." "Yes, Larry. We think it's a great move for our margins. Aladdin says that factory will increase your carbon emissions, and we are heavily focused on sustainable investment. We'd like you to cancel it and focus on green energy instead." "But Larry, our board approved this, and you're just a passive index fund. You're supposed to just track our stock, not run our company. We own 8% of your shares, making us your largest shareholder. If we vote against your board of directors at the next meeting, you will be unemployed by Friday. Do we have a deal?" "We love green energy, Larry. Arizona was a terrible idea anyway. This isn't a hypothetical conspiracy. It is the mechanics of modern corporate governance." Because BlackRock, Vanguard, and State Street, collectively known as the Big Three, control so much of the passive investing market, they are the largest shareholders in almost every major public company. They hold the keys to the kingdom. They can decide who sits on the board, how much the CEO gets paid, and what social or environmental policies a company adopts. And in 2008, when the global financial system actually did blow up, the US government didn't call the regulators. They called Larry. Because the government was desperately trying to buy up trillions of dollars in toxic mortgage assets, they needed a tool that could actually calculate what those assets were worth. The Federal Reserve didn't have that technology. But BlackRock did. The Fed hired BlackRock to manage the multi-billion-dollar bailouts of Bear Stearns and AIG. They became, effectively, the fourth branch of government, the private entity hired to clean up the public mess. Today, BlackRock stands at the absolute center of global power. They are the invisible infrastructure of capitalism. They own the companies that make your food, the banks that hold your money, the pharmaceuticals that make your medicine, and the supercomputer that tracks the risk of it all. You don't know who they are, but they know exactly what you own. They've optimized the world for risk, but in doing so, they have created the ultimate centralized point of failure. What happens when the machine that runs the world gets a glitch? Only Aladdin knows.